before we go into kind of the gamma models, I want to maybe spend time in looking at also some of the other tools that we have, which is our really quant models. We are working with the Transpiler team to also potentially integrate those charts into the application. So this is something that we'll be working on in the next few months. So very exciting, because you'll be able to potentially add those to your Transpiler dashboard as well. And then maybe we can discuss this further, Mike, when you go into the platform. But essentially, like, why did we develop quant models? Right? Because it's important that you are able to, especially in the crypto market that moves really fast and is very driven by sentiment and macro environment, to understand whether we are in a positive market for crypto, in a negative market, and whether the direction of my crypto coin is bullish or bearish. So we developed 3 models, and I'm going to go over some of them, and then we can go into the dashboard to see how to look for them. But essentially, the first indicator that we develop, we call it the crypto risk on and off. And why is this important? Because crypto is really driven by macro, by what happens to the US dollar, by what happens to the stock market. If you remember, during COVID, the market dropped and crypto dropped faster because it was a risk asset. So understanding if we are in a risk on or risk off scenario by looking at the macro environment can tell you if it's a good time to be in the crypto market, or if it's a good time to be out of the crypto market, because the crypto market is going to react stronger than other assets, right? So when we are in a risk on scenario, which is when we see the indicator on the green quadrant, we are in actually essentially in a bullish environment for crypto. When we are in a risk off scenario, we are in a bearish environment for crypto. So essentially, this is going to tell you it's going to give you some indication on whether it's a good time to potentially buy or sell crypto, potentially by looking at what's going on in the macro environment. Cool. And why is this important? Because the cryptocurrencies are high beta risk asset. So they tend to behave like small tech companies. So whenever the market goes up, they outperform. Whenever the market goes down, they underperform, right? And also, it's a risk asset. So whenever something is happening, so when we were talking about tariffs, the market is panicking. The first thing they're going to do is sell crypto. Before they sell their stock position, they're actually going to sell their risk asset, whether it's emerging market, crypto, and so on. So typically, when we are in a bearish scenario, bearish market at the macro level, the crypto market doesn't perform as well. So it's good as an investor to understand when we are in that scenario.
Definitely. Lots of money to be made, but lots of money to be lost at the same time, the risk to reward. I'm just curious here for these, what is kind of like the general like time frame? Like, is this risk on, risk off, like more for like swing traders, like overall market sentiment, or is it kind of like shorter term, like the gamma levels, or?
This can be used both for swing trade as well as for day trading. So this is kind of like a regime like change, right? So it doesn't matter if you're day trading or swing trading. If you see that the regime is changing, then maybe you want to adjust your position. So if you are a long-term investor and we are moving to a positive regime, then that's good for you, because potentially there could be a good upside. If you are a day trader and we are in a negative regime and you're thinking of going long, then maybe you want to evaluate the data and what that is telling you, basically.
Yeah. Maybe in a bearish regime, day traders would maybe prefer shorts more so.
Exactly.
Yeah, exactly. Makes sense.
So it's very, very simple the way it works. And then we're going to show you how to find it. When we are above zero, we are in a risk on, and you can see it from the green quadrant at the top. When we are below zero, we are in a risk off. And then on top here on the chart, you will see a red arrow or a green arrow, very simple, if we are in a risk off or risk on scenario. And then we can see some back testing in a second when we go into the platform. But essentially, this is a regime indicator. Are we in a bullish environment for crypto? Are we in a bearish environment for crypto? Then, of course, the way you define the trade, whether it's through option, whether it's through long spot or whatever futures, it really depends on the user, depends on your strategy. But the idea behind it is really to support you with understanding what's going on at the macro level that could potentially affect your crypto positions. So This is really, I'm going to show this. It's just really a simple back test. This was taken 2 months ago, so it doesn't account the recent Ethereum rally. When we launched the product about beginning of July, we took this data and we showed you, we created a simple back test. So essentially what this does is the red line is the buy and hold of Ethereum, and the green line is using the risk on and risk off indicator. The strategy very, very simple. We go long Ethereum if the indicator is above zero, and we go short Ethereum if the indicator is below zero, and then we exit when the indicator switches. So very, very simple. And as you can see, you can quickly tell that here there's a very, very strong correlation with what's going on in the macro environment that could have given you an additional performance or in the round of 200% at the peak here by just following the risk on and risk off indicator.
Yeah. And I'm sure if like you didn't want to short either, you could just probably sell out of Ethereum when it goes short, just in case people don't have access to like the ability to short crypto. But yeah, very cool. Nice back test.